We have a lot of very interesting guests visit us every day, and one stood out to us last March, well actually this March 2012. He's going to be our next guest in about a minute. He was very precise as to when the market would peak, and we're talking about U.S. equities generally, when the market would peak, what would happen on the pullback, and then what would be the next step. He also had the days that all of this would happen, so we thought a couple of months later that we should have him back with us to go through the numbers. And I would say, and a lot of his work is based on technical patterns, but long trends, and from those long trends he pulls out forecasts. It's been probably one of the trickiest times to be forecasting equity markets, given all the crosswinds and headwinds that we've been facing. I'll give you a little preview. He's been not bad, actually.
Is that the little preview?
That was the little preview. We were just waiting for him to get
We're talking about coming up with a precise number on a precise day, a precise hour of that day where the market's going to top or bottom. And it would seem to many people who watch and who even use technical analysis that would be kind of a mug's game, because the likelihood of you ever getting that kind of number is practically zero. But even so, our next guest continues to try, and his name is Charles Nenner. He is the president and CEO of Charles Nenner Research, and he joins us again. Charles, good to see you again. And last time we spoke was March 28th, and the numbers that you were looking for, the S&P 500, you said could reach 1,449 on April 19th. It didn't get to that level. It actually topped out at 1,422 on April 2nd. When you look at the charts today, where do you see this market going from here?
I thought it went to 29, but that's okay. So I wrote at that time, we approached it, we missed about 1.5%, but we want to go out anyway. And we said our downside target is 1326. Now today we saw intraday 1330, I think yesterday also. So the question is, is that close enough to 1326 or not? We're out of the market. We're watching this from the sidelines. There were some big pockets of weakness. If you look at the broker dealers, they went down 20%. Oil stocks went down 15%. And you never know when cycles stop which group is the weakest. There's always going to be a surprise on the downside. So we're watching that 1330, 1326 level. The cycle didn't bottom yet. If it holds, then we will have another try to go to the highs again. We should be making a major high in the stock market.
We want to find out when you're going to want to get back in, but I want to also address first the TSX, or the S&P TSX composite. We didn't talk about it the last time you joined us, Charles. Our market has significantly underperformed the 500 so far this year. What are your thoughts on the TSX?
I think it's going to continue to underperform. A couple of reasons. I, contrary to other people, think the bull market in commodities is getting to an end. Our cycle on crude topped when it was $110. We were short crude. By the way, our downside target on crude was 93, which we reached today. So we covered the shorts over here, but crude is down. We're short on copper. We have gold and silver on a sell signal. The Canadian dollar is on a sell signal, and I think that altogether is very risky for the exchange, for the stock exchange.
Before we go back to Canada, you said one thing with regards to the S&P 500. You said the market could be setting itself up for a major high. What is a major high when you do the math? Where could the S&P 500 get if it finds supported?
No, it's like this. 49 was the target. We get the target when we went long in February 2009, around 700, 740. So that was a long-term target. Now, we missed it by 1.5%. As you said before, I like to be very exact. Was that the target? It's within the range you missed at the 1.5%, or we're going to go there exactly? So if I mean a major high is, maybe we'll get exactly to 40, 49. A major high means a long-term high. So it doesn't go from one day to the other, but where there's distribution and where you seek to be big institutions go out of the stock market.
And Charles, okay, now given your discussion, you covered your shorts on oil, the Canadian dollar is a sell, you don't like the Canadian stock market. It sounds like you'd be recommending to your clients to pull out of Canada altogether. Is that accurate?
Well, actually, I advise to pull out of Canada all asset classes because I have a feeling there's nowhere to hide. I mean, we're long the U.S. bond market, and it should be making a major high in September. I'm very much afraid that the people who are now pouring into bonds, I don't know exactly why they do it, will be stuck with the bond yield maybe at 1.6 at the high, and then, I mean, at the low of the yield, but the high of the bonds. And then we have a bear market for many, many years. So soon you see the 10-year at 5-6%, inflation of 4-5%, and they still will be stuck with getting 1.6 on the 10-year. So it's always like that. The masses get drawn in right at the end because they think they recognize a trend. And my cycle work is exactly the opposite. We exactly look where the high is coming and where the low is coming. So we see a major high in the bond market. We're still long the bonds. We've been long for the last 2 months, but we also see there a major high coming.
So just to be clear, so you're long bonds right now, but you're looking, I would understand, looking for an opportunity to leave the bond market in the United States. So when do you want to get back into equities if, in fact, is 1449 going to be your all-time high? That's about 8% from where we are right now. Is that the trade back to that high? Is that what you're looking for?
Yeah, except looking at my system, let me explain 2 things. First of all, there is a linear relationship between profits on the S&P and stock prices. I think the profits are going to be up 6%, which would give a 6% up on the market. And there's an exponential equation between interest rates and stock prices. When interest rates go down, then stock prices go up exponential. So as everybody agrees now, there's not that much room anymore for lower rates, so you can't forget about that. So all you're stuck with is a linear relationship of 6% profit margin on S&P, so which will bring the market up another 6%, maybe 8%, which would get me exactly to 1449.
I'm curious now if we could turn your attention to gold, perhaps. And we're looking at the price of gold continuing down today. It's sitting at $15.56, so down yet another $5 today. Where's your target? The last time we spoke, you had a long-term price target of $1,900 an ounce. Is gold setting itself up in any way, shape, or form to get to that target anytime soon?
No, what happened was we sold at 1,900 and have been out of the market since then. We have a longer-term target, even around $2,500, but that could be a year, 2 years away. For the moment, gold is on a sell signal. It has to, like the books say, shake out the weak hands. And I see it happen because when we sold at 1,900, we had people who follow our system says, well, I'm there in for the long run, and if you think it goes to 2,500, not going out. Then it went to 1,800, 1,700, 1,600, and now they're still selling. So I tried to explain, why don't you sell at the high and try to go back in the low, because theoretically, I understand that people say I stay in for the long run, but practically, if you lose 30%, you get afraid and you sell at the loss. We're not yet at the cycle low. We could go even in the high 1,300s before we resume the uptrend.
And silver the same, more downside in silver?
More downside in silver also.
And what
it's not a happy picture. It's very hard. Sorry?
No, I was just going to say, in what magnitude?
I don't have that in my head, the downside price target of silver. But silver, because we're short and we're out of the market, so it's not necessary for me at the moment to know exactly the price target. When we get close to the cycle low, we calculate the price target. I happen to look at gold, but not at silver.
All right, Charles, great to hear from you again. Thank you very much for joining us today. We appreciate it. Charles Nenner is President and CEO of Charles Nenner Research, joining us from London.